It is a red day on the market across the board. All three indices are red. My entire portfolio on the day is in the red, except for two of my investments. And they happen to be two of my worst investments right now, Target and Disney. But I'm going to share the top 5 performing investments that I have in my growth portfolio, 4 of which had earnings this week or have them coming up later on after the closing this evening. So let's get started. First up, we're going to be talking about Meta. Meta has been pouring massive funds into their AI and metaverse. Recent reports suggest that Meta and Microsoft are working closely to accelerate AI spending. Wall Street is mixed on this. AI can be a costly venture, but it's crucial for Meta's future in virtual and augmented reality. Let's take a quick look at the performance of the stock, my results, and their earnings. So, as I said, on the day, all of the big tech is down. Meta is down 4.56%. Year to date, it's up 63.11%. So, here's a look at their earnings numbers. There have been concerns, as I said, over their spending on AI and the digital space, but this ambitious spending plan may affect their profitability in the short term, but we have to think about the future that they are trying to build. Now, on to my position. I got started investing when they were having a dip down in between 420 to 475, and I'm currently up about 25%. So, next up, we're going to look at Google. They've also just had their earnings. Google has been integrating its AI into its core services, and its newest update is related to Google Maps to improve AI-driven navigation features like 3D route visualization, traffic updates, and personalized tips. So just another new innovation that's keeping Google ahead of the game when it comes to AI. Here's a look at their current earnings results. Their ad revenue continues to show strength and be a major driver, and they have been focused on AI advancements into its platforms like YouTube. Okay, so on the day, down 1.57%, year to date up 24.27%. And now on to my personal results. And I've been investing into Google since 2021. And this is in my growth portfolio, an additional portfolio that I am doing outside of my 401k and other investments, and I'm currently up 37%. So moving up on my list of top performers is Amazon. On the day, Amazon is down 3.67%. Year to date, it's up 23.82%. And Amazon has been on a winning streak when it comes to their Amazon Web Services, the AWS. That's where they've been growing a lot. So Amazon, just like many of the big tech companies, has been focused on keeping up with AI. There is pressure for Amazon to keep up with companies like Microsoft and Google, especially with Wall Street worrying about rising AI expenses. If Amazon can show gains in cloud revenue and a balance with its AI investments, we could see another impressive quarter from the e-commerce and cloud giant. So we'll be getting Amazon's results later today on the 31st. So now let's take a quick look at my current results when it comes to Amazon. I've been investing in Amazon since 2021, and I'm currently up about 42%. Next up on my list is NVIDIA. And I just started investing into NVIDIA at the beginning of 2024. On the day, it's down 4.54% and getting close to the buy range that I want, under $130. So I better keep my eyes open. Year to date, it's up 171.19%. And NVIDIA will be having their earnings in November, around the 20th, I believe. The hype around their stock is nonstop. NVIDIA's GPUs are essential for so many products and the future of AI. We can see that the demand for AI is just climbing across the board. It is needed in so many things that we use on a daily basis. And NVIDIA has been a leader in this area with consistent innovation and a strong market share. So, as I said, I just got it started investing into NVIDIA at the beginning of 2024. I wish I had gotten started earlier, but I still see the future ahead. So here's a look at my results when it comes to investing into NVIDIA. I'm currently up 45%. And now the number one performing stock currently in my growth portfolio is Apple. Apple was one of the first investments I believe that I made when I started investing on my own outside of my 401k. So I got started investing into Apple back in 2020. So on the day, it's down 1.29%. Year to date, it's up 22.35%. And Apple has been working to convince customers that the new iPhone 16 is more than just an upgrade because of the new advancements that they've added related to AI. They're hoping to set a new standard when it comes to AI and smartphones. So their earnings are also coming out this evening on the 31st. So we'll see what the sales are looking like and get more of an idea soon as to if consumers' budgets are allowing them to really get on board with picking up the new iPhone. Okay, so here's a look at my results of investing into Apple. I'm currently up about 49%. So, as we could see, there is a common thread of AI throughout all of the investments that I've touched on today, the ones that are performing the best in my growth portfolio. These companies are all competing hard to be those strong competitors in this new AI landscape. Things might be shifting fast, but NVIDIA's already there, are all making sure that they're redefining their services and products to make sure that they are on track to be on board with what's going on currently with AI. So this was just a look at some of the blue chip stocks that I am currently holding. Even if earnings fall a little flat, I'll be holding these for the long term because I am a long-term investor and I think that these companies still have potential in the future. So share in the comments, what are your thoughts on these investments? How are they performing in your portfolios? What industries are you focused on when it comes to those individual stocks in your portfolio? The investments that I shared today are in my growth portfolio outside of my retirement account because I have different goals when it comes to investing, including early retirement and investing on behalf of my daughter. Retirement is always my top priority, but I know that I'm a person that wants to have additional investments that I can tap into when I am ready. And that's why I'm working to build up this growth portfolio as well as a dividend portfolio. I hope you enjoyed this update. If you're ready to open up a new brokerage account, check out my links. They'll be in the description and pinned in the comments. If you're not already, don't forget to subscribe and give this video a thumbs up. Hit that notification bell so that you can keep up on my latest videos. Thanks for watching. I hope you come back so that we can continue to learn and earn together, continue to be on this path to invest, build wealth, and stay out of debt together. Okay, bye.